Good morning, traders, and welcome to the Pirate Traders live stream. My name is Charles. Today we're going to be looking at the ES and the NQ and talking about how they move through the two-way auction process. The auction process is a way we make sense of what the market does so that we can find tradable opportunities within it. The theory is very simple, that the market moves are random. The market will go up or down for totally random reasons. And so if you can understand the context of what's happening, you can find edges within that randomness that you can take advantage of. This morning is a great example of one of those edges. So I thought I would go live to the public YouTube and talk about it this morning to give everybody a heads up of how I see things. Now, today is one of those days where I unfortunately have to say the market could go up, it could go down, or it could go sideways today. All three are, basically equal opportunity. And so how do we make money? If it could go up, down, or sideways, that's not very helpful, Charles. How do we make money? Well, we make money by recognizing which of those three is happening and then taking advantage of that, okay, in a way that fits with that. So we got a survey going in the chat. If you have not yet, please first smash the thumbs up button. Let me get that like action going here. A little like and subscribe for the pirate. And then also, if you could just jump in the survey in the chat and let us know what you think. Where's the market going to go today? All right, so let me just start by taking us back in time a little bit to give us the context of how we got to where we are, which will help us understand what comes next. This back here that we have from last week, this is what we call a balance area. A balance area is basically just a range that the market gets stuck in over multiple days. And it will often move from one end of that range to the other until it is ready to break out of that range. Okay? Once it breaks out of the range, the market is no longer balancing. And there's one of two things that can happen. You can break out of a range, you can get short covering and FOMO buying that creates momentum, and the market just takes off to the upside. The other thing that can happen is you can break out of the range, not quite have that momentum yet, and then you come back to back test whatever was the high of that range. We call that the balance area high. And it's not an exact number. You don't need this is the number exactly to a tick. It is just a basic concept that when a market is stuck in a range and it tries to break away from that range, often it will come back one last time to test the highs of that range, or if it breaks to the downside, to test the lows. Okay. And that if it finds support on that retest, then it's really got the juice to keep it going higher. And the concept is very simply, they were able to break out of balance, but they didn't bring in enough new buyers. They didn't convince enough people with the breakout to go long, to create that FOMO and to create that chasing of price. So instead, they pull price back down. They put the market on sale, and then that gives the market the opportunity to bring in discount shoppers, new buyers there, and that's when you get the big move to the upside. Okay, so that's a concept called balance and excess. You break out of balance, you either get excess or you come back to back test the balance. Okay, well, what did we get? We broke out of balance. And then the next day, while we did technically make higher highs and higher lows, it was technically a trend up. The day was just a balancing day. It was just a sideways, choppy, go nowhere, nothing day. And then we had that again in the overnight, the night after that. So yesterday when the market opened, my thought was we are either going to balance with time, we're either going to go sideways up here in the upper end of the range, or we're going to pull back with price to back test this balance area high. I've had this marked for 2 weeks, this level at 57.53 is that balance area high. And look what happened yesterday when the market sold off into there. It kept pushing and kept pushing and kept pushing and kept pushing. Finally, it got back to that balance area high. That's where it ran out of steam and went sideways the rest of the day for the last hour or so. Okay. What did it do in the overnight? It tried multiple times to break lower, and it kept coming back to that balance area high, that previous balance area high. So what that tells me is this move down yesterday was just a test of this high. That's all this was. This wasn't really bearish, like the world is coming to an end, stocks are going to crash and burn. It was just the market saying we need discount prices. We need to go on sale here to bring in the buyers to keep the momentum going higher. So the question the market is asking itself this morning, right now, is do we have the buyers, right? Do we have the buyers here at the previous balance area high to be able to get that momentum up? If we don't, and this is where things get very interesting, if we don't have the buyers today to get us back above 57.53 and stay there, the highest probability in the days ahead, and I would say probably by tomorrow, would be for us to rotate down to the balance area low. That's going to be somewhere around 56.60, where we have a lot of weak and poor references that need to be repaired at the lows. So as of this moment, that to me is the higher probability thing to happen just because of the weakness that we have. Now, there is always door number 3. Door number 3 is you come back to a balance area high and then you spend even sometimes multiple days just grinding and grinding and grinding at that balance area high, which would be the sideways day. So the way I see it this morning, one of those three things is going to happen. Either we're going to get back above the balance area high, find support, and keep going, which will lead to a big move to the upside, even as far as yesterday's high. Or we're going to chop sideways right on the balance area high all day and go nowhere, and maybe even do it again tomorrow. Or we are going to begin our descent down towards that balance area low. And so when the market opens this morning, that's all I need to ask myself the question. Which of those three is happening? Which of those three scenarios is happening? And as we speak, we are getting the setup to find out if it's going to be lower. If the market is going to go lower today, it will turn this overnight low, this area we're at right now, 57.30, into resistance. It'll keep poking into it, and it won't be able to get through there. If we get resistance here at the overnight low, it is a sign this market is going much lower today. If we do not get resistance, if we just poke down here and then reverse right back up through the opening price, it is a sign we are not going lower today. We are either going sideways or higher. Okay? So at this very moment, I'm watching this overnight low to see, do we get new selling here? And if so, I will be bearish for the day. All right, let's call in the survey. If you have not voted yet, speak now or forever hold your peace. The more of you that vote, the better the results are, the more reliable, by which I mean we inverse them. All right, only 30 of you, only half of you are willing to vote. I don't know what you all are so scared of. It's an anonymous poll. But 41% of you are looking for the market to go down. 38% of you are looking for the market to go sideways, and only 19% of you think the market is going to go higher today. So you know what that means? It means go long the market. No, I'm just kidding. Those are actually pretty even split odds, and so it makes sense, right? That's why you end up with such an opportunity of what could happen at a balance area high, because everyone's got a different opinion. Everybody thinks it's going to crash, or they think that it's going to go nowhere, or they think that it's going to bounce. And so everyone's taking different bets that have different effects on the market. Good morning to Jay. Another day in paradise. Arjit is here. Welcome, welcome. DNK in the house. Vu, good to see you. Will is here. Nap, good morning. He says we have pending home sales index at 10 a.m. We'll look out for some volatility there. Percy in the house. 200 dogs, good morning to you. And Kevin says good morning to everyone. All right, so we are getting a little bit of new selling here at the overnight low. That is bearish to see. It increases the odds in my mind that we need to poke through this weak reference. Backfill this gap to 57.23. This is bearish to see. All right, we shouldn't have needed to backfill this gap if we were going to find support at the balance area high. So the new selling here at the overnight low tells me that we're going to pass through this level, 57.23. The fact that it's happening is a little more bearish on the day, but there is still a chance we find support right here and turn around and come back through the open, which would give us that sideways day. So I would say now the chances of an up day are significantly less, because if we were going to have an update today, we shouldn't have needed to fill this gap first. But there is still a very good chance we have a sideways day. So we're looking to fill 23 and then see if we get support there. If you have not yet, please smash that like button. We got 75 people hanging out, only 21 likes. I bet if we can get it to 50 likes, we can get more than 100 people hanging out and watching. I bet you the YouTube algorithm will do us that favor. Talking about smashing the thumbs up. Give a little push to the thumb. Okay, so now that the gap is filled, I'm keeping a very close eye on these ticks. Right now, the ticks are showing us that we have had nothing but new sellers since the market opened. People are just selling and selling and selling and selling. And so my question is, does filling the gap change that? Do some of these sellers take profits? Do new buyers try to buy this as support? Okay, so I'm watching the ticks. If the sellers give up, and the buyers step in, the tick should rotate back up to the zero line. If we get more new sellers, this is a look above and fail of a previous balance area high, and it becomes very bearish. Suffice to say, if the buyers do not want a sell-off today, now is when they must defend. Now is when they must step in and get those ticks back above the zero. Pavel says the NQ had a gap and go. Let's take a look. No, so that's... Oh, you're right. It was a gap and go. You are correct. Filled the gap, immediately sold off. So the NQ is basically identical to the ES in terms of balance areas. Your overnight lows were basically that balance area high. Okay. So today we are back inside that previous balance area. If they don't reverse now and get up and out of here, the highest probability is that they're heading down towards the balance area lows. Again, not necessarily today, but over the next 2 days. And that's going to be somewhere around 19,640. Okay. So there's a fuck ton of money to be made between here and there to the downside if you just wait to make sure that the buyers don't step in and reverse it right now. Watching those ticks. DNK says, I should have gone short when they were not able to keep above the previous day's low after missed a good entry. It happens. There are times when I see a good entry for a trade, but I don't take it for whatever reason, right? And after the fact, I want to hold myself accountable to that. And I want to be like, why didn't I do this? This was a great opportunity. I missed it. What could I have, what could have made me get in this trade so that next time I don't make this same mistake again? And then there are other times where I look at a missed opportunity and I go, who gives a fuck? And I just let it go. This morning would be one of those who gives a fucks. Because we opened for both markets right on a previous balance area high, it's very hard to have confidence in momentum, a minute into the day. The thing is going to grind around and chop around. So I would let that one go and not worry too much about it. Personally. Okay, so the buyers are trying to defend here. We got that gap fill. Obviously, sellers took profits, right? Buyers stepped in. Where are those ticks now? They're back to the zero line. This is where we consider the buyers and sellers to be equal, okay? So we're pushing back up into previous resistance. This overnight low has been acting as resistance. So now we're looking at the ticks again. What happens from here? Do the ticks get smacked back down below the zero line again? If we do, that's the sign of sellers stepping into resistance, which would be bearish to see. Or do the ticks hold the zero line and keep going up? That will tell us the market found support and it's now heading through the opening price, which would lead to a choppy sideways day. So the ticks are pretty much ready to tell us, do we have momentum down or not? Johnny Silver in the house. Good morning to you. Smash that thumbs up button. 88 people hanging out. Only 32 likes. They hate me. All right. They'll like me now because I'm making a call. I am bearish. So we just got resistance at the overnight low. We can see what happened to the ticks when we got to the overnight low. That is a sign that there are new sellers stepping in. When you re-enter an old balance area, you do not want new sellers to step in. Because, again, just putting this in a conceptual understanding of how markets work, okay? If pulling back from here to here wasn't a big enough pullback to bring in some discount shoppers to turn around and start heading the market higher, the fact that we're getting new selling inside the old balance area tells us that the probabilities now favor a move to the opposite end. Okay? So this is bearish to me. The only thing at this point that will change my mind and make me no longer bearish is if we get back above today's opening price around 57.43 and stay up there. We can poke up at it right now, and that would be okay because the market has already given us the signal. The signal is we have sellers, and they're not just gap fill sellers because they got the gap fill and we still got the resistance. So this is people selling their shares of companies. This is people unloading, and that will likely happen until the market gets so cheap that they can't resist buying it back. Okay? So I am bearish as long as we stay below the opening price. Might be a little choppy here, might grind around for a few minutes. No worries. As long as we're below that opening, I assume we're getting continuation to the downside as a look above and fail of a previous balance area high. All right, moment of truth. We are back at that opening price. If I am correct, you should see those ticks get smacked down right here, right now, as sellers defend. They don't want the market to pass back through that opening price. If we do pass through the opening price, then I was wrong. And I was too early on my call. Looking for a smackdown in the ticks. Yeah. A little tick, tick, smack in the face. Core says, was looking for a quick buy up from the low on the overnight low. I don't recommend that because, again, everything is about probabilities, right? When you get below the overnight low, like we did, and you get new selling, like we did, you then decrease the odds significantly that the market wants to go up that day. Now, again, there's always chop, right? There's always going to be moments where you get little bounces and stuff like that. But bigger picture, if the market wants to go up that day, there should not be new sellers below the overnight low. Okay? So if you don't trust the momentum down, you're not willing to short, that's okay. But I don't think it's a good place to go long. Now, you might say to me, well, Charles, I'm a scalper and I went long at the overnight low and I just took profits at the opening price. And so now I'm a genius and I made money. Well, then I say, great. That's awesome. You're just a different type of trader than me. I'm looking to catch the 50, 100 point move, not guess and gamble at a 10 point move. You know what I'm saying? So that's, even if the market is going to go higher today and I'm going to go long, I want to first see it get above the opening price, see it find support, see evidence it's going to keep going before I get in that long, rather than like just guess it's going to get, it's good time to go long. I want to build probabilities in my mind. And part of building probabilities is accepting that sometimes the probabilities will favor one thing happening and the opposite will happen, which is happening right now, right? Sometimes the probabilities will favor a move lower and then out of nowhere, you get a little pop of short covering and you change things. And so then you just change your mind, as I will right now, going back to neutral. Okay? So if I'm in a short, I'm stopped out now, and I'm saying I don't want to be short anymore because the odds are shifting. The odds are now favoring a sideways choppy day where we just bounce up and down through 57, 53 a bunch of times. So let me wait for more information. What would that be? Market gets back down below what is currently the halfback, 57.36. It starts to spend time. It starts to bring volume. Boom, I'm bearish once again. At that point, the ticks will be much lower. Everything will look different. And it'll be easier to get bearish there, again, for the bigger move to the downside. Or if the market works its way all the way up above the overnight high and it starts to bring in new buyers up there, I would be willing to go long. Or if the market worked its way above the overnight high and failed and came back in, I would be willing to go short. But right now, between here and here, this is gambling zone. Because now, with the failure to take the market lower, the highest probability is sideways. Is a very boring, choppy, sideways, drive everyone nuts kind of day. And that's how I trade. I just take it one step at a time. When I see an opportunity, I get in a trade. If I lose, I step aside and wait for the next opportunity. It's never a guess in terms of what the market is going to do. It is always probabilities. And the probabilities don't always work because the market is random, but they work more than they don't, which is how you be profitable. It's how you make more money than you lose. Core says, what days do you stream live for free on YouTube? Just randomly whenever I feel like it. I generally try to do it on days that I think something interesting is going to happen, where there's something educational in it. Today, the back testing of the balance area high was the reason, because it presents great opportunities. Okay, so now we are back at another, area to start watching the market to see how it reacts. We're back at that previous balance area high. Yesterday, this area was acting as support. In the overnight, this area was acting as support. We can see that because time and volume tapers off right here around 53. So now the question is, does previous support become resistance? Does the market get smacked down here? Now, at this moment, we're favoring the idea that we're going to go sideways all day. So right now, the higher probability is that we will test the overnight high. But if we get smacked down, that will be bearish to see. Yeah, guys, I hate to be the bearer of bad news, but this is setting up to be very choppy. So again, I don't have a crystal ball. It's hard to predict, 2 hours in advance what's going to happen. But what I think is going to happen now is I think we're going to creep our way up to the overnight high around 57.74. I think once we get above there, we're going to fail and pull back in, coming back through the opening price, and then probably turn this node down here around 57.30 into support and just go sideways. I have a feeling at least the first few hours of today's range is going to look very similar to this overnight range. And that could potentially set us up for a break one way or another later on in the afternoon. But methinks they want to chop first. And so you say, Charles, how come you're not bullish that it's going straight to the moon? How come you're not bullish that it's going to get above that overnight high and keep going? Because the market has already told us. I need you guys to understand this. Information is valuable even if things don't happen the second that you get the information. The information the market gave us this morning was that we have new sellers inside this old balance area. You do not get that when you're getting support at a balance area high for a big reversal to the upside. You get taper. It pokes in and it reverses right back out. It does not poke in and stay down there and bring in new sellers, which is what we did this morning. So the market has already told us it's not going to have that big, huge reversal day to the upside. If it was going to, it would have done it first thing. So what it's telling us now is the more likely thing is that sideways grindy day. Because it can't go lower and it can't go higher. So what can it do? Just keep going sideways. Okay, so very short term for the scalpers. It does look like the market wants to head up and test 57.67. I'm not sure it'll go much further than that in the minutes ahead, because I do think we're about to spend some time chopping around here and doing quite a bit of flip and reverse up inside this overnight range. But the ticks, well, at least they were just now saying that we were going to get support there for that poke up, but nothing necessarily beyond it. All right, well, today turned out to be a boring day. Sorry, guys. I was really hoping we were not going to do this and just chop on the old balance area high, but that's what they're going to do, at least for a few hours here. If you have any questions, hit me up. Jay says, U.S. pending home sales The actual was 2%. The forecast was 1%. Oh, no. Athob says, what about the 80% rule? What 80% rule? Remind me. Truman says, all kinds of things for the market to digest. Big tariffs, big move yesterday. Yeah, I mean, it would make sense to balance at a balance area high. TNK says, the move up was due to the home sales news, and now we are going back down. I don't agree. I mean, it might the spike would have been because of the news because it happened so randomly out of nowhere. I mean, you can just see if you look at the chart right here. It was a little early, but something just totally changed. Look at all this liquidity get pulled at the exact same second that price made this big pop. So yeah, something changed, and that caused that little instant move to the upside. But bigger picture for the day, I still think we're now spending the day grinding around on the bounce area. It's just what the market loves to do. Loves to chop and grind right on a balance area high. Get them long, squeeze them. Get them short, squeeze them. So as I said, I think the next squeeze is at the overnight high. Market gets up there. Oh my God, it's going to the moon. Everyone get long, get long. And then comes right back down. Danny G in the house. He says, good morning, y'all. So pessimistic, Charles. I just want a fun day. I just want a big, messy trend day. We did technically have one yesterday, so I don't know what I'm complaining about, but I just hate when I psychologically am prepared for something exciting and then it doesn't happen and I know it's going to be boring for the next 2 hours. It's just like, it's psychologically painful. Freddie says, you mentioned looking for the larger moves earlier. Can you explain on that? Yeah, I'll go through and repeat it because it's how you make sense of everything that I do in my day trading. Is you put things in a context for what is happening bigger picture. So there's an auction process, a process of buyers and sellers playing tug of war, competing with each other on every time frame, right? It's happening second by second. There's a competition, minute by minute, hour by hour, day by day. There's always this competition between buyers and sellers. If you can make sense of what is happening in terms of that competition at a time frame that is higher than the time frame that you were operating at, that gives you an advantage at your time frame. So if I can understand what's happening on a daily time frame, like what is likely to happen today, right? Then I can get a pretty good idea of where to take trades intraday throughout the day that I may be planning on sitting in for an hour or two. You know what I mean? If I can understand what are the things that are likely to happen today, at some point in the day, I'll have an edge to enter a trade. So talking about the market on a daily context, we have this thing called balance and then breakout. Okay, so the market is in a range for a while, then it breaks out. That's what we had last week. We had balance, and then we had a breakout with the big gap up and the move higher at the beginning of the week this week. Okay, so that was a breakout of balance. From there, so from, the market opened up here yesterday, there's one of two things that can happen. You can get a breakout that leads to short covering and FOMO buying, and the market basically just goes straight up. That is much less common, but it does happen. Or you can get a breakout where the market has to come back and back test the balance area high before it makes its big move higher. Okay. So every time you have balance on the daily and you get a breakout of balance, which always happens eventually, one of two things is going to happen, either the instant continuation or the back test. Once the market comes back for the back test, which is what it did yesterday. Yesterday was that move back to the balance area high, is one of three things happens the next day. Either the market goes nowhere all day and it just grinds and grinds and grinds right on that balance area high. Again, not uncommon to see. Okay. Sometimes for multiple days, it'll grind in a tight range before it makes its move. Or, so that's scenario number one and what I think is happening today. Or it'll just tag that balance area high and turn around and continue higher, or it'll fail and go all the way to the opposite end of balance. So when the market is opening this morning, and I know we had a balance area, I know we broke out of that balance area on Monday, we came back to test it at the end of the day yesterday, I know one of those three scenarios is happening today. Either the sideways day, or the sell-off towards the balance area lows, or the bounce that gives us the rebound, okay, and creates the momentum to the upside. Let me just zoom out on the chart here and try to show you some other examples of this to make sense of it, okay? So here you can see we had a balance area where the market was going sideways, broke down, came back up, okay, tested that balance area low, continued lower, okay? Same thing in here. Balance area, broke out, came back, continued higher. Here we have a balance area. Market broke and just instantly continued lower. Okay? That can happen too. Eventually it came back to back test it. Okay, so now we have what we call a look below and fail. So we had a balance area that was here. The market was able to break out of that balance area, but when it came back, it did not turn that into resistance and keep going. So what did it instantly do? Instantly move to the opposite end of balance. All right. So that's what just always happens when you have a balance area. You either back test it and then reverse up, or you instantly rotate to the opposite end. And so that's what I'm looking at this morning. And so what are the levels that I'm watching? I'm saying, first things first, can the market get below the overnight low? If it does, what happens when it gets there? Does it just barely poke below there and then reverse right back up? Or does it get new selling down there? Okay. The reverse and come back up means sideways day. The new selling there means lower day. So we got there. The market pushed below that overnight low. We were getting new selling at that moment when we were down there. The highest probability was a continuation lower. Now, that's not what ended up happening. It ended up rotating back up. So now that we have some hindsight, that we have some more information, we know, okay, we're not getting that big sell-off day today. They tried. They tried it first thing this morning when the opening bell rang, and they couldn't do it. If they couldn't get the market lower this morning, first thing when the opening bell rang, they're probably not going to do it anytime soon. Like I said, maybe this afternoon, but they're not going to do it now. They're not going to do it in the next few minutes, right? Because they just tried and they couldn't do it. What else does it tell us? It tells us the market isn't going to go up today. It's not going to have that big rebound to the upside because it should not have gotten that new selling if it was going to do that. So that leaves us with door number 3. The only thing the market can do now is chop and go sideways onside the balance area high. So now I'm a day trader. I know what the market is doing now. I know it's probably going to spend the next few hours going sideways in the range. So what am I looking for to tell me to enter trades? Well, what happens when we repair weak references above? Do we get new buying after the repair, or does it instantly reverse back down? New buying means we're moving up to the next one. The reversal means more chop, more sideways, more grind. When we get above the overnight high. If we get above that overnight high and we get new buying, well, then we can get bullish. Then we can say, okay, this thing is looking to make the move higher. But what if we don't? Well, if we don't get that new buying, if the market pokes up there and it runs out of steam and starts to come back down, what do we know the market is doing today? It's going sideways. So what can we do up there when the market looks above and fails the overnight high? We can short. So you can go short up here after the failure, after it comes back in, and you can grab the move back down through the opening price. Okay? So what do we do when the market passes through the opening price? We take profits because we already know the market can't go lower. They tried. So we know that when the market goes down through the opening price, it's probably going to find support in here and then turn around and come back up. So that's how we use the context of the daily time frame and knowing what a balance area high is and knowing what a market does at a balance area high to look for trades. So from this moment right now, market pushes down below opening price. It's finding support. You could long for a move back up towards 57.52. If the market goes above the overnight high and finds support, you can go long for a move up to 57.90 or 5800. If the market goes up and it doesn't find support, you can go short for a move back down through the opening price. Once the market moves back through the opening price, you can go long in support, and so on and so forth all day. Now, at some point, something will change, right? The market doesn't just do the same thing forever, endlessly. So maybe we go sideways all day and we break out of this range tomorrow. Or maybe at some point in the afternoon, we get above that overnight high and we get that new buying, or we get below that overnight low and we get that new selling. At that point, you can shift your thinking. You can say, all right, we've spent enough time grinding sideways on the balance area high. We've spent enough time balancing. Now we're ready to make our move. And again, buyers above the overnight high means that move is up. Sellers below the overnight low means that that move is lower. And so there's lots of ways to play it. You can be a scalper and you can take little trades in here while it's chopping around. I just explained to you how. You could also, as a bigger picture, just say, I'm done with the market. I'm going to put an alert at the overnight high. I'm going to put an alert at the overnight low. Whenever the market passes through those levels later on in the day, then I sit down in front of my computer and I start asking, what's the market doing? Because if you chose to do nothing right now, let's say you just took a short from pretty much the low of the day using the opening price. You've just taken on a 20-point loss, maybe 25-point loss, okay? And you're saying, I don't want to do these little gambles looking for little 5-point, 10-point trades inside the range. I've taken on a big loss. I want to wait until I can win it all back, until there's a good enough opportunity to cover my loss. Well, then you'd want to wait until you got above the overnight high or below the overnight low, and then take those trades. Because if you get above the overnight high and you get support, again, the move is all the way back up to yesterday's high. And now I do not think that's what's going to happen today, but I'm just saying, if we get there and we see that new buying, that's what it's setting up for. And it's the same thing with the low. If we chop sideways for a while, we get below that overnight low again, we get new selling, it's a big move to the downside. There's a lot of money to be made in there. So you could choose to say, I just don't want to mess in the middle. And so each trader has to figure out their own personality. How does the market make the most sense to me? What time frame do I operate the best on? Do I want to be taking 1 or 2 trades a day and waiting for that perfect opportunity? Or do I want to be a scalper that's taking trade after trade after trade, grabbing this one and that one and the other? It doesn't matter which you are. By understanding the context of what's happening bigger picture, you can look for those trades, whether you're the scalper or you're the day trader or you're the swing trader. You can look for those opportunities based on understanding the auction process and where we are and what's likely to happen here. And again, it's always a probability. It's always this is the most likely thing to happen. Doesn't guarantee it'll happen, but it gives you an edge because the most likely thing will happen more often. I will say the art of day trading has changed over the last year or two quite a bit. It used to be much more about getting in trades and just waiting and waiting and waiting for those trades to play out. Now it's about waiting and waiting and waiting to get in those trades. You often have to let the market squeeze one side or the other first. You have to let them convince everyone to go long up at the overnight high first before you finally get that big move down. And so sometimes you have to sit for hours waiting for all the fucking longs to play themselves out before you get that good trade. And then the trade ends up happening in like 10 minutes. It ends up happening so quick. So that's just the way day trading has changed. It is a game of patience waiting to enter trades now, not patience waiting to take profits. Jay says the sellers are having a hard time taking it down. I would say both are having a hard time right now. The buyers and the sellers. I mean, this is just straight up tug of war, right? They're just both fighting to try to break away. River Rock says, what is the volume next to the red bars and how many they sold per price? So there's two different volume profiles that I'm looking at within today's range. This is today's range. So from market open till right now. Okay. The one on the left side, that is the volume profile for the whole day so far. So from the open to now, this is how many contracts in total. It's not a delta. It's the total number of contracts that traded at each one of these levels. And you can see the actual number, or you can see a bar that just represents the relative amount. So red is the top 30% of volume. Pink is the middle 40%. White is the lowest 30%. Okay. Then, now it just changed. So then every 30 minutes, this volume profile right here changes, and it just shows me the current 30-minute profile that we're in. Where is the volume? And this is a great example of that, because sometimes it may not look like you're bringing in a lot of volume relative to the day at a particular level, but you can see, holy shit, we're bringing in a ton of volume right there if you look at it in the 30-minute. So it just kind of helps contextually to have both visible to you there. And then lastly, I have the cumulative volume profile, which is this one over here on the left, which is just combining all the time that we've spent trading in this range in the past. What is the volume for those areas? And what you will find is intraday each day, we often find support or resistance at the large cumulative nodes. That's kind of where the market will slow down. And we often pass through the small nodes very quickly. Okay. So we pop right through the small nodes pretty quick. And the large ones we get stuck at, and we chop and we grind and we chop and we grind. Still trying to repair this first week reference from yesterday. Not quite there yet. The tug of war continues. Okay, so I know these things get confusing because I'm always talking about different time frames and different things happening. And on this one, I'm neutral, but that one I'm bullish, but blah, blah, blah. But you have to understand the context to be able to enter trades. So bigger picture for the day, I'm neutral. Bigger picture for the day, I think we're going sideways. Okay. But I think the first place the market is going to go is to this overnight high. Okay. We just got the C period to reverse almost exactly where the B period reversed. That's what we call a poor high. So the minute that that happens, it's like the market just put a little magnet right here to pull on price. So what that means is the further that the price moves away from that poor high, the more likely it is to find support. Well, there you go. Repaired before I even got to explain it. The more likely it is to find support and come back and get repaired. So now this is just intraday. Over the next, couple of hours, the market has momentum up. I think that momentum is only going to last to get to the overnight high, but we now have momentum up. So now we can watch the base of these B period single prints as support to come back. So the market comes back to the base of the singles, finds support. We can look for the move up to the overnight high. The market is now one time framing. So that increases the odds, at least for now, that it's going to keep going up. But I would say if they want to keep going up, they want to find support at the base of these B singles. Third day in a row with this super exciting tempo first thing in the morning. SC says maybe this is just a gap fill. Could be true. Could be true. I will jump on board that train if we get new buying above 57.74. But to me, it's not. To me, the balance area is more important than the gap and how the market reacts to that balance area high. The gap fill can be a reason for momentum, for 5 minutes, for 30 minutes maybe, but it's not going to give you momentum for a day. That's new buying above the overnight high that would do that. Nor says, can you show how to use reference area settings? Reference area settings. I'm not sure I understand what you mean by that. He just got window trader, so I know he's asking about a window trader question, but try to ask that question another way so I can figure out what you mean. Sook says, how likely will it be coming down to the B period single prints? So I'll put it to you this way. I would give it like a 90% chance that it's coming back down to those B period single prints. I would give it a 90% chance it's coming back through the opening price. But I would be wrong if right now they turn this overnight high into support. So if they start to bring in new buyers up here and they keep this going, then I'm just fundamentally wrong. And we're looking for a bigger move to the upside. In which case, again, we're several steps away from this right now. This is not my prediction right now. Right now, I think we're going to run out of steam and come back down. But if we were to stay up here, if we were to get new buying and we were to continue the momentum, then it would change it to, we probably won't backfill these at all, because then we'll end up printing the D up here and that would be cessation. So, but again, as of right now, I would say a 90% probability, because I think the market is chopping on the balance area high. And that doesn't mean you cross through it once. It means you cross through it like 8 fucking times. It means you just keep coming back through that balance area high and get it again for hours. You just keep grinding through it until everyone is so bored and fed up with the market. Then it makes its move out of nowhere in 2 seconds. Oh, the lines you circle manually? Okay, so the stuff that's in yellow, this is a different tool. This isn't Window Trader. This is a tool called Epic Pen. And this isn't useful for you guys. I just use this for live streaming, so I can point out things I'm looking at because you can't see where my eyeballs are. So the yellow stuff is just me manually drawing arrows and pointing out things. These levels over here, if you want to get those levels, you click Control on your keyboard and then click on a particular level, and it just pops it right there. Then you scroll over on the left side to where the settings are, and then you click on the settings, and then where it says label, you write in whatever you want it to say there. You can change the color. You can change all the different stuff in there. But you get it there by clicking Control and then clicking on the screen where you want it. Seven Mile Reach says the NQ passed through its overnight high and filled the single prints from yesterday. Single prints are such a great tool to take for profile targets. Yes, sir. Single prints and weak references, man. They work like magic. Oh, there was a single print. There was one single print. Yeah. So what he's talking about is, what he's talking about is you got this single print that you left behind right here in yesterday's range, a single print down, and you got another one up here. And so the idea is that would have been a scalp trade today. I mean, that was only for a couple points, but the market gets above that overnight high. You see it's finding support. You want to get long because of support at the overnight high. You want a target. A great target is to backfill that single print. In the same regard, if the market continues higher and it gets support again, what's a great next target to take profits? The next single print. Because if they can get above this one and get new buying, they're likely to go to the next one. That's not quite the way I trade, those little tiny scalp trades like that. But it is relevant information. It's the same thing with weak references. So, this morning when the market opened, we had a weak reference here. And a weak reference here. So if you'd have been longing somewhere today, let's say on the cross back through the opening price, down here, the look below that failed, came back through the opening price, let's say you're longing, what's a good target to the upside? Take profits at that weak reference or that weak reference. You can always get back in the trade, right? You're at the overnight high. If we come into some resistance and we come back down and we turn it into support, you can always get long once again in that same area. But you lock in profits where there's a high probability they take out that weak reference. So the same thing is true right now of these single prints at 57.90 from yesterday. If, and it's a big if they can turn this overnight high into support, that's the next target to the upside. But they have still not proven it to me. Not yet. All right, so now you're thinking, Charles, you said that if the market could get above the overnight high and it could get new buying above that overnight high, that could mean we're going to the moon. That could mean we're going to have a massive, huge up day. To which I would say, not yet. Sorry, suckers. I don't trust this buying just yet. It is new buying above the overnight high. It is bullish to see. But the volume cliff that we have, the fact that it's literally this exact level has just been holding the market here, that is not bullish to see. That is a sign that it's just bots. It's just computers. And when it's just computers going long at the overnight high, they are usually doing it to convince everyone else. Oh, look, we've got support. We've got buying. So then you get FOMO traders that start chasing price up here. And that actually fuels the big pullback when you squeeze those FOMO buyers. So yes, we are getting buying above the overnight high, but no, it's still, I don't trust it yet. I'd like to see us push up into this resistance at 81 or 85 and then see it hold as support. Then I could trust it. But I think that this is just a liquidity grab. Take out a few sellers, get a few FOMO buyers, and then reverse out of nowhere when no one expects it.